So let's come to the integrated case study 3. ABC Limited is a public company listed on the NSE having its registered office in Delhi. The company is primarily engaged in the manufacturing of pharmaceutical. During the preceding year, the company recorded a remarkable turnover of 5,000 crore accompanied by a net profit of 805 crore. Additionally, the company has secured a loan facility from the SBI amounting to 1,000 crore. Yes, the PQR and Company, a firm of CA based in Delhi, has been appointed as a joint auditor along with PK and Company, right? PQR and Company, a firm of CS and XYZ, an estimated CA firm in the same location, that is Delhi. ABC Limited has already completed the appointment related formalities as well as they have also signed the engagement letters. The engagement letter contains the details on the objective and scope of the audit, responsibilities of the auditor, management, and the identification of the framework. Moreover, while planning the audit, joint auditors have divided the responsibility for conducting the audit in accordance with 299. Further, the audit team has established 50 crore as the materiality threshold calculated at 1% of turnover. Now, during the audit, PK and Company came to know that one of the employees of the company has been involved in a fraud amounting to 201 lakh. Additionally, as a part of the audit procedure, the auditor has also sent the confirmation request to 100 suppliers to confirm the year-end balance. The said requests were designed in such a way that supplier will directly respond to the auditor, indicating that the supplier agrees or disagrees with the same, right? So SA 505 positive confirmation request. However, in this regard, the confirmation responses were received only from 37 suppliers. Moreover, as a part of the audit procedures, auditors of ABC also want external confirmation from the 37 debtors to confirm the year-end balance. However, in this process, the management refuses auditor to allow to send the confirmation, and after asking the reason for such refusal, auditor came to the conclusion that such refusal is unreasonable and the auditor is unable to obtain relevant reliable evidence from the alternative audit procedure. So it's a limitation on scope. In addition, while forming an opinion, PQR and Company had a different opinion on the valuation of inventory, but PK and Company and XYZ and Company had the same opinion, and accordingly, given their majority stance, both PK and Company, XYZ and Company assert that PQR and Company must endorse a common audit report aligned with their opinion. Right, so difference of opinion among the joint auditors. Apart from this, XYZ Private Limited, an associate enterprise of ABC Limited, the company XY Private Limited appointed ZMR and Company, another firm of CA, located in Rajasthan, as a statutory auditor of XY Private Limited for the first time for the current financial year. The financial statement of XY Private Limited was audited by predecessor auditor in the previous financial year. During the audit for the current year, ZMR and Company came across a material misstatement in the opening balance that affects the current year financial statement. In this regard, the auditor also discusses the said facts with the management. However, the management does not accurately pay attention to the same and does not either adequately account during the year or disclose or present the same in the financial statement of the current year. The other important financial information of XY Private Limited is as below. It paid up capital, credit balance of P&L, turnover, borrowing, right? The current year, previous year, rupees in crore. And now coming to the first question. In the above given case, what should be the next course of action on the part of the auditors of ABC Limited when the auditor concludes that the reason for management's refusal to allow the auditor to send the confirmation request is unreasonable and the auditor is unable to obtain the relevant reliable evidence from the alternative procedure? Right, so now this constitutes a limitation on scope, right? So auditor should have included the reason for refusal by the management and the fact of the inability to obtain the evidence from the alternative procedures in the key audit matter paragraph. Auditor should have included the reason for refusal by the management in the written representations as per 580. Auditor shall communicate the matter with TCWG and also determine the implications for the audit and audit opinion as per the SE 705. An auditor should have included the reason for refusal by the management and the fact of inability to obtain the evidence from the alternative procedures in the emphasis of matter paragraph. Right, so no key audit matter, no emphasis of matter, no mentioning it in the representation, but simple. It's in the case study of SA 580. The alternative procedures also or the reasons are unreasonable. You communicate to TCWG and you modify your opinion as per 705. Okay. whether PQR and company should adhere to the opinion formulated by PK and company and XYZ company or explore alternative option. Yes, they should give us a separate audit report. And a joint auditors, in case of difference of opinion, they may report separately, not bound by the views of the majority of the joint auditors. And they will make a reference to each other's report in the other matter paragraph in the report. Okay. They will have to go with the opinion framed by the majority of the auditor, has the option to incorporate a distinct audit opinion paragraph within the common audit report. Oh my God. Okay. Can align with the opinion formed with the majority of the auditor. However, any dissenting viewpoint should be prominently highlighted in the emphasis of matter paragraph. So I hope the option PQR and company has the discretion to issue a distinct audit report, separate audit report independently. In such a scenario, the reference to the other audit report issued by the majority of the auditors, the common audit report, should be noted within the other matter paragraph. Okay. And in the above given case, what should be the course of action on the part of ZMR and company when they found a material misstatement which has not been accurately accounted or presented or disclosed in the financial statement of the current year? So prior period, there is a misstatement. ZMR should not pay attention to the material misstatement. We will not pay attention to this point. ZMR should express a qualified or adverse opinion as per 705. ZMR should take such matter in the representation from the management, and then there is no need to report such fact in the report out. ZMR and company should disclose such a fact in the emphasis of matter paragraph will not be enough. Right? So should express a qualified opinion or an adverse opinion as appropriate in accordance with SE 705. Okay. Right. So one more case study done. Okay.